Gold and silver markets are heating up in historic ways, and silver is set to explode. Hello, everyone, and welcome back to Gold and Silver Stacking Saturdays. And I'm really pleased to share this information with everybody today. My name is Rick Fronek. I'm the CEO and founder of Silver and Gold Solutions and Work Smarter for You, and here in beautiful Galena, Illinois. And in today's exciting, I want to call this exciting because a lot of the information that I found out over the past week is something that everybody's going to benefit. Now, this is an informational and educational call. This is something that I like to share information that the mainstream media is not sharing with you, and this is something that's valuable information that everybody should have, especially if they're looking into saving in the form of gold and silver specifically, or other types of precious metals. So I like to kind of scour the internet, and also there's several people that I have been following for a long time that have been in the precious metals industries, and I have a really high regard for a lot of the people and the information that I share on these calls, and that's why I like to bring this information to you, because I want to make sure that everybody has an informed decision on what they need to know before they go ahead and start saving in silver and gold, or if they want to make adjustments to their portfolio, or how they're saving for their future. So in today's topics, we're going to be covering the gold and silver ratio. Now, in my opinion, has made a huge adjustment, although it might not seem that much, but it is actually making an adjustment. Then I will cover that here in a moment. And then also why big cash might be flowing into gold and silver. Now, I'm going to share a short video clip from Mike Maloney on that, and that gives you some insight of what could possibly even drive more of the markets higher than the way where they are right now. And then also, the ripple effects of the sanctions put on Russia back in 2022 are still playing an impact into what is happening today. Okay. And that's some of the clips and information that I'm going to share with you. We'll kind of back that up. And okay. So, what I want to do is, like every week I do want to say one thing real quick here. This historic surge in gold is actually, it's shaking confidence, but it's what I mean by that, it's shaking in the confidence in other countries' view of the global currency, the US dollar. Okay, so that's helping, I made the comment about the um sanctions put on Russia and how that's still impacting everything. This kind of all ties together. So a lot of the information I'm going to share here today is going to kind of wrap everything back up into one fine point, and that is basically, what you need to know before you start saving in silver and gold. Okay, and I do want to point out, this is something that I shared a couple of weeks back, that it's about 3 weeks back, official gold reserves surpass U.S. Treasury holdings for the first time in 30 years, but central banks are just warming up. Now, that's the key here, is the theme with the central banks is something that's constantly driving the markets. Okay, and they're also, in some regards, have a big hand in the overall picture of everything. So what I like to do is, every week I've been, since we did our pre-launch here on June 21st up till now, September 27th, I kind of eliminated some of the dates here, but I share what the gold per ounce is and silver per ounce is at the end of each week. Now, typically the gold silver ratio falls into that 40 to 60 range, where we'll take anywhere from 40 to 60 ounces of silver to equal 1 ounce of gold. But it's earlier this year, we are actually at the point where it was over 100 to 1, which shows you that there's that gap that's shortening up, as to where silver is starting to play the catch-up game, where gold always spikes first and then silver is slow to follow, but it does eventually catch up to it. And that's why we're seeing these prices in silver escalating here. But we will also see gold escalating as well. So last week we were at 36.86. And this week we're at 37.61 an ounce for gold. So that's a huge jump. Okay. Same with silver. You look at this as in the realm of the silver markets. This is actually a huge spike. Okay, you're going up, $3 an ounce in 1 week's time. Okay, so that's something that's actually really huge. So depending on how you're saving, whether it's gold or silver, they're both solid, safe haven assets to have. But in this case here, either one, silver, you're going to start seeing a bigger spike now as far as percentage gains. But so right now we're with silver at 46 and gold at 37.61, it takes 81.6 ounces of silver to equal 1 ounce of gold. And last week we were at 85 and a half, just over 85 and a half. So that's actually a huge jump when you look at the overall picture of the price, the value of gold and silver. Okay, so kind of keep that in mind, and with what I'm going to be sharing here, in the back of your mind as I'm sharing this other information here. So like I said before, when is the best time to buy, you know, when is the best time to buy gold and silver, saving it? It's not too late. It's still a very good time. But if, for those on the fence, I would, just go ahead and jump off the fence. Okay. It's something that I personally, whenever I am able to, I save in the form of precious metals, specifically silver and gold. So that's something that I encourage everybody to at least look into. And it's something that I always wanted to say is, even if you are able to own a little bit, whether it's silver or gold or both, it's something that's going to hold its value over the course of time. And that's what we're seeing even more in today's, especially with the historic gains that we're seeing overall from this year alone in gold and silver. Like gold is up like 45% on the year alone. So that's really huge. Okay, so what I'm going to do here is I'm going to share an article. But before that, I do want to say one thing. This is like personal from me to you for everybody who's watching this. You know, before my dad passed, I had started talking to him about gold and silver, and yet he did not. We never got to the point of him telling me exactly how he went about doing it over the years. I do remember him buying it back in the 80s, when gold had hit up. I think he bought it around when it was like $600 an ounce, but then it peaked in the 800s. And then after that, I remember my mom harping on him about, why don't you do something with that gold? Why don't you get rid of it? And eventually he did sell it. But over the course of time, he did start picking up a little bit here and there over the course of time. So I wasn't sure exactly how he did it. And that's where, when I started doing this and, right after he passed, it was almost like a month to the day that he passed, somebody introduced me to the company that I always talk about, 7K Metals. And it was almost like one of those signs that for me, it was like, this was meant to be. This is something that I need to look into now. And from that point to today, I've learned a ton of information. That's where, as I'm learning and picking up all this information and what drives the markets and what, can actually be a stronger financial future for someone. That's why I like to share what I'm sharing. Okay. So it's, that's from my personal message from me to you is, if you're able to do anything in precious metals, by all means, try and do it if you can. Because at some point, if they do the revaluation of gold, like there's been rumors and, over the course of the past year or two, um, if they do the revaluation of gold, then most people, the average American or average person would not be able to afford it then. So it's something to kind of keep in mind, if you're able to do something, do it now. Okay. So enough of that, but I just wanted to share that with everybody. So it's, um, it's actually exciting. It's an educational thing. So for me, I'm learning as I go as well. So, and when I step away from the mainstream media and don't listen to what you know, the coined phrases that they're supposed to tell everybody to keep everybody in the dark. And go down the rabbit hole, so to speak, and see all the information that's going on behind the scenes. It's very eye-opening. So what I want to do here is, this is an article from Kitco News. Okay, it's an interview with this SBI Stephen Inez, and this article's from Ernest Hoffman of Kitco News, and it's called "Gold's Gains Are Historic and Unnerving and Represent a Deliberate Recalibration of the Global Order." So what I want to do is I will put this link below the video, so you'll have that if you want to read the full article, which I kind of have it on here anyways, but if you want to read it yourself. So the article states gold's price gains are great news for precious metals investors, but the yellow metals surge towards 4,000 per ounce also reveals a degree of economic and geopolitical anxiety not seen since the late 70s. Gold isn't just climbing, it's blazing a trail, and that's true. That feels both historic and unnerving. Prices surged another 1% on Tuesday, pulling the $4,000 per ounce marker into clearer view and extending a run now that sees the metal up 45% this year. In doing so, gold has vaulted past its old inflation-adjusted peak from 1980, scaling above every keen psychological resistance and pressing higher in uncharted territory. If I were the bond market, okay, Inez said the yellow metals momentum isn't just about inflation. If it were, the bond market would be sounding alarms with spiking long-dated yields and a steepening curve. Instead, gold's rise is feeding on a cocktail far stronger: central bank accumulation, capital flight from fiat currencies, and geopolitical hedging that reeks of systemic mistrust. So, and kind of in a nutshell, that everything that's in this kind of, he's not pointing it out specifically in this article, but this mistrust had happened when the U.S. put sanctions on Russia. Okay, so that was the red flag, and I've talked about that before, where a lot of other countries and central banks are like, well, wait a minute, if we do something that the U.S. doesn't agree with, are they going to do the same thing to us? And that actually opened up a huge can of worms. Okay, and that's the worms are still coming out, so to speak. Okay, but but this isn't just an inflation panic. Unlike 2011's rally fueled by quantitative easing era fear of money printing, this move feels more calculated, more anchored in sovereign choices rather than retail frenzy. So the retail frenzy is when they're referring to the average everyday person wanting to invest or save in gold and silver. And then also, of course, you do have the actual retail, quote unquote, the companies that use gold for manufacturing and what have you. But in this case here, they're usually referring to people that the average everyday person that wants to start buying it. Okay, so that actually hasn't impacted the markets yet. And when it does, that in itself is going to increase, help increase up or push the price of gold and silver up. Countries are deliberately diversifying away from the dollar, not out of mania, but from cold strategic calculus. Beijing's decision to open Shanghai as an alternative vault for official reserves is more symbolic than structural, yet it broadcasts a loud truth. Any adjustment to the architecture of the global financial system carries with it an implicit bid for gold. And that's something that he talks about the Fed cut rate, which everybody knew that was going to happen. But even just the talk about that before it happened, there was a fluctuation in the market, and that kind of drove the markets higher. Um, So he's got on here, uh, even as Powell tries to resist political pressure for more aggressive easing, investors sense that money supply is expanding again and fiat credibility is fraying at the edges. That's why this isn't just about traders chasing momentum. It's about central banks, sovereign wealth funds, and long horizon investors quietly shifting their compass toward hard collateral. And he says if 1979 was a firestorm of fear and 2011 was a retail panic wrapped in quantitative easing doubt, then 2025 is shaping up as a deliberate recalibration of the global order. The lesson from history is the same. Ignore gold's message at your peril. That means if you're if you know that it's a value to have, then work towards doing it. Okay. So and that's what he's basically just trying to say. Okay. It's like, the history, when you look at the history of gold and silver, specifically gold over the course of time, um, any type of chaos type thing, like you had the housing crisis in 2008, in between 2008 and 2011, then you have, the COVID back when that happened, there you see the spike in precious metals, and of course now with the Russian-Ukraine war and the sanctions put on Russia, that's where all these central banks are stockpiling it, and it's actually really having a huge impact on everything. And then I did want to share this. This was a reference from an article from September 2nd that I shared. And 10 years from now, we're going to look back and say, wow, we were so stupid to think that prices now are close to peak. Um, so it's like, this is something where he goes on to say that gold prices are so far away from where they should be. And that's what we're seeing now is because of the value of it and what other countries are doing. It's what's driving the markets. Okay. So what I want to share, I'm going to share a clip from Mike Maloney, and I shared this one here last week. Um, but in this, he was talking about $7 trillion of silent assets soon heading for gold and silver. But after that video this past week, he has, I was wrong about how much cash could come chasing silver and gold. Now him and Alan Hibbert share a chart here I'm gonna share this part of the video, and it's what happens. You'll see in the video, how that could impact the price of gold and silver. So I'm gonna go ahead and start this here. Let's see. Sorry about this. Like I said, this is all, yeah, hang on. $100 that can. Okay, here we go. In a previous video, I did mention this tweet right here, a staggering 7.5 trillion is now sitting in money market funds. That's a new all-time high. And yes, you mentioned that we had a chart in the book that sort of included this information and more. Basically, there's even more currency that's going to come chasing gold and silver
than the amount that the money market funds. So
Yeah, the final chart was a chart of all the really liquid currency where you can it can come. Oh, there it is, the chart directly from the book. So this was done in the summer of 2022. 16 trillion, not seven. Wow.
exactly. And the chart we were just looking at that was 7.5 trillion. That was basically the yellow section here, but 3 years ago. So between about 7 and 12. So maybe there was only about 5 trillion in money market funds 3 years ago. Now it's up to 7.5. But what about the blue and the green areas? They have grown as well. So let me show
Okay.
you that. Are you ready to see it?
Yeah, this is for everybody out there, I have not seen this chart and I do not know what the number is. This is a surprise.
Okay,
Go
so right
ahead.
now
Yeah.
the old total was just about 16 trillion. The new
Uh-huh.
total just over 20.
Whoa, look at that growth. Wow. The growth in the money market area, the yellow, is absolutely insane. Currency plus demand deposits and unused credit card lines. So this is, these are dollars that can, within a day, come chasing the safe haven asset in a crisis, and a crisis is coming. I really, October is always the spooky month. We're in September, the end of September right now. October is just famous for crashes. And I really think that we could get a crash as early as this October.
It's
And
definitely up.
in that case, a bunch of this is going to come chasing gold and silver. Okay.
Exactly. And just to put some numbers in it for anyone curious, the green area grew by about 1 trillion, the yellow by about two, 2.5, and the blue by almost another one as well. So in total, it grew by 4 trillion in just 3 years. And as we
Wow.
said in that previous video, it's basically it grows before a market crash. So this is investors sensing a crash, and it rises a lot right before a correction or a big crash. So
Yeah.
to your point, we absolutely could be getting it soon.
Okay, so the point of some of
Okay, so that when I was watching this the first time, I've watched this video clip a couple times, and I'll have the link below as well if you want to watch it too. And I also highly encourage you to follow Mike Maloney if you're able to, if you have the time. He does have a lot of great insight, and he's been kind of the guru on gold over the past couple decades here. But anyways, with when as far as these, the chart that they were shown, that it actually increases right before something huge happens, whether it's a crash or some type of, like in this case here, some type of geopolitical thing where, or the change in the monetary system. Okay, I mean, that's always something that they've been talking about behind the scenes as well over the last couple of years. So something to kind of keep in mind. Okay, and there's one other clip I want to share here from this, and this is then we'll get on to the next one here. So bear with me one second. Go. So this is what they're going to share here is that was for the United States. Now this is for the entire world. Okay, so it shows you where the market cap of major assets are globally, so across the entire globe. Okay.
amazing. And there's gold and silver. Wow. Explain some of this then. Okay. Obviously, real estate around the world is huge. So bonds and stocks, a lot of that. Bonds, stocks, and currency. So on top of money market funds and currency in circulation and
And
money
unused
market.
credit lines.
Ah, yes, unused credit. So currency that doesn't exist yet, just promises by banks that they will create that currency for you if you want it. So 20 trillion. And then to that, you have to add what people can get for selling some of those stocks and bonds, because some of them will. I want to remind everybody that I believe right now um, that uh, gold is about 1/2 of 1% of global financial assets. And in 1980, it was about 8%. So it could grow by 16-fold if the same thing happened as in 1980. But as we know, this time it is really, really different.
Yeah, exactly. And we all know people personally who own real estate as effectively a store of value, right? It's part of their financial portfolio. It's not just their primary residence. And so if some of those real estate investors decide, you know what, my returns aren't that good in real estate, there's a lot of risks, there's jurisdiction risks, there's all these other things. I want to sell that property and move into something that doesn't have those risks. You can see how just a tiny percentage of this purple bar, if it goes into a different asset class like gold or silver, that could easily double or triple the market cap of those assets. So I think
Wow.
it's just a matter of time.
Yeah.
So that's interesting. Okay. And just from the perspective of people making that shift, whether it's stocks and bonds or selling their properties or whatever and investing back into gold or silver, something physical, something tangible. Okay. So I
Yeah.
wanted to kind of keep that. Um, so now this is my this video here is, I have a lot of respect for Andy Scheckman, and so a lot of times, he is a gold silver owner. He owns his own business, okay, and so it's something that's sometimes it's hard to see if he's biased towards it, but he's got a great grasp on everything as well as far as real estate, oil, you name it. He does have a good pulse on the economics, whether it and as far as physical assets that people may own. Okay, so in this case here, he's interviewing this gentleman by the name of Grant Williams, and they have some really interesting perspectives. This kind of all ties back into what is driving the gold and silver markets, and then also another thing like Mike and Alan were talking about the real estate and stocks and bonds, but they're going to touch on something, and then I share in the second video clip is about the movement for people that are in the crypto industries making a switch. Okay. So let's go ahead and play this. And like I said, this is live, so I apologize for the the videos and crap at the beginning.
Is the end of something. I think for a lot of people, it feels like the beginning of something because that change is so painful to endure. The reality is this is the end of a build up and a perspective. More time perhaps studying Austrian economics, spent more time understanding the reason that things were going up was not necessarily because everything was great and business was booming and the markets were representing economic reality, but the fact that what they were really representing was this currency debasement. And you can see it in share prices, you can see it in asset prices, and it's being reflected in gold. But everybody understands buying houses, everybody understands buying shares, everybody understands buying bond funds. Buying gold is just that little bit of extra work. It's a little bit more complicated. And when you don't need to complicate things, people don't do it. And so that's why in the West particularly, there's a massive under owning of gold right now, I think, and that's why you're starting to see the price move as it is because people are trying to play catch up. It's different in the West, in the East, as you well know. Um, Gold is much more of a way of life there. It's much more of a familiar asset to own, and so we're in that period now where uh, investors in the West are looking at what's happening. The penny started to drop, and they realize that gold is um, if not the solution to this, then certainly one of the primary solutions to this. And people are starting to adjust accordingly. And I personally think that the fun and games in gold and particularly silver is really just getting started because people are still trading it. Once we get to the phase where people realize that they have to own it.
Okay.
Hello, friends.
Sorry about this.
Things change dramatically because when people want to own it, it's not for sale. Yeah. And that could lead to some really interesting moves.
Couldn't agree with you more. I'm going to get to silver in a minute, and that's really what I'm talking about. We've seen gold reach these levels, which, maybe from the outside, people think, wow, it's topping, it's at all-time highs, which I disagree with rather, because the people printing the money, the people setting the rules seem to be the ones that have been buying it all along, the central bankers. But now we see this massive drive in the United States, net importers of gold, and literally month over month over month over month since November, since the election, the amount of gold coming into this country is truly off the charts. It's an anomaly from anything that I have ever seen. It's funny.
Okay, so the key point I wanted to share in that video, that clip right there was, the people making the rules for the world, whether or your specific country or the world, are the ones that are actually stockpiling the gold ahead of time. So with the United States doing that and all these other the central banks stockpiling gold in China and Russia as well, um, you know, I'm not sure if it was Andy Schectman or somebody else at one point in the past had made the comment that, and actually, I shouldn't say I have heard Andy Schectman say it. I've heard Mike Maloney say it and Robert Kiyosaki say it, and also Pete Ricketts. It's that I'm sorry, Jim Ricketts, is that, he who owns the most gold makes the rules. So that's where the United States and all these other countries, United States, China, Russia, and the central banks, they're all trying to position themselves as far as having X amount of percentage of gold, and that's going to put them on the tier level of, and I think at one point I did see a chart of which countries had the most gold. And I did share that back at, I think back at the beginning of one of our presentations um, that he who has the most gold makes the rules. And that's where the United States still is allegedly still number one, but all these other countries are trying to get up to that position as well. Okay, so I'm going to share this other part here. There's two other short clips, and these other ones are just about 2 minutes each, and then we'll wrap everything up. Okay, so uh, now, like I said, I apologize for the commercials here. Okay.
Well, I think you're going to see some truly extraordinary things happen in silver because the kind of money that's going to go into it is going to be the kind of money that just craves that risk and will chase it for who knows where.
Yeah, if you look at the vault holdings in London with less than a day's worth of trading as a free float, um, I would think that fireworks certainly would be in order if we see that this massive surge of investor demand on top of smart money seeming to move ahead, and that is what.
Well, I mean, Andy, I hate to interrupt, but it's not the massive investor money that's going to drive it. It's the massive speculator money, and I want to make the differentiation between those two things. I think it's really important. People invest in gold for the long term. And yes, there are traders, yes, but silver is such a speculative asset. It's going to pull in an enormous amount of purely speculative capital. And once we start seeing the double long silver ETF get launched, which we will, and the triple long silver ETF get launched, which we will, then I think you're going to really see some things happen. I mean, ultimately it will end in tears, but for the time being, it's going to be a glorious ride for the people who are willing to strap themselves in and enjoy it.
Okay, so that was when I was making the reference to the people that are coming out of in their conversation there as they're talking about people in the crypto industry because the younger generation, they're more apt to put money into cryptocurrencies, and it's almost kind of like the rush of the how much it's going to rise or whatever the case might be. But in this case here, they're talking about the shift from cryptocurrencies to silver. Okay, and so the younger generation that because silver is a little bit more volatile over the course of with what's probably going to happen here soon. They're going to say that that's going to shift the money from cryptocurrencies into silver. Okay, now I'm going to wrap this up here with this one last little clip here, and then we'll finish everything up real quick. All right. And I hope I don't get another damn commercial.
Constant reminders of what participant Crohn's disease or ulcerative colitis can make it hard to be there when it matters most.
And my point then was the very fact the United States did that and froze another central bank sovereign assets completely realigned all the incentives of every central bank in the world. And I mean every single one, because obviously with the dollar being world reserve currency and the world's energy currency, there isn't a central bank in the world that doesn't own dollar reserves because they either have to import energy, in which case they need dollars to pay for it, or export energy, in which case they receive dollars for it. So everybody owns some degree of dollar reserves. And you have, at a stroke of a pen, told every single one of those central banks that there are circumstances which we can't define, under which we will impair your sovereign assets. We've just proven what they are. And in Russia's case, it's because they crossed the Ukraine border. We can't guarantee you what those circumstances are for your particular country, but you can no longer assume with 100% certainty that there is no chance we will ever do that. And as soon as you do that, again, incentives change. And every single one of those central banks now, as a matter of national security, has to have a plan B so that there is there's no way that their sovereign assets, their sovereign currency reserves can be impaired by another government. And from that day to this, we have seen that taking place. Those of us who watch the gold market have seen it taking place in plain sight. The amount of buying of gold by central banks has gone through the roof, and with good reason. We can see the fact that Trump has unleashed a huge set.
I'm not going to go through that again with you guys. Sorry about that. Okay, so that's what, that kind of circles back into what I was talking about as far as the central banks, and that's still the huge driving force behind everything that's happening. Okay, and that's what he was reiterating. That's what I've kind of shared over a couple times now. But I do encourage everybody to, like, he did make the comment that gold's a little bit more difficult to save, and it's actually not. Okay, and that's where I don't want to beat a dead horse, so to speak. But you know, with certain companies, they allow you to save incrementally. And the one that I highly do recommend is 7K, because they do it where they'll let you do $1 or two at a time. Whereas all these other companies are having you do exact fractional amounts, whether it be a quarter, half ounce of gold or 1 ounce of gold or what have you. But most average everyday people can't afford that, to drop that into one lump sum. And so that's where the benefits of having a company like 7K does come into play. Okay, so I encourage people to check that out. I will have a link for them below, and just for information, whether you go with them or you go with like gold, silver, like uh, Mike Maloney, he has his own company. Okay, so then they're a solid company. Miles Franklin or Andy Scheckman has his own company, and they're a solid company. And I actually have purchased from both of them in the past, but at the same time, you know, I've done different things in research on all the different companies, and hands down, when it comes down to price and what you're able to do, I do encourage people to check out 7K. So anyway, so when you look at the 20-year silver price, okay, here we go back to the highs. Okay, back to 48.58 was the high, and we're actually closing in on that now. Okay, with silver up to where it is now, it is going to surpass that. Okay, so it's there's no guarantee in life, but with everything, all indications it's headed that direction. But I do encourage people to check out silverprice.org or goldprice.org, because they do, on a daily basis, you can see what the gains are. And it goes from, a day, 30 days, 6 months, a year, up to 20 years. And you see what the percentage gain is for silver and gold. Okay. So it's always kind of something kind of interesting. And then here was like the chart that I like to show about the central banks. This is 2025 right here. So you still see, here's the 2022, February 24th, 2022 is the key date with the Russian-Ukraine war. And you see what's happened since then. Okay. So, and of course, here is the overall gold price from, back in 1973 up till now. So you see, and I'm not sure why they have that as a close. This was, I took the, this is as a Friday, but it was higher than that. I'm not sure why they have that as a total, for the close that day. So I do want to talk about this. Okay, so I'm going to wrap this up right here. Uh, I was going to have my drawing for the 7K membership today, but two things kind of came into play for that. One, and this is something that anybody who's at this point in the video and is trying to find out, well, what's happening with this contest, I have to extend this 1 week. And the reason why I have to do that is because the one link that I had on some of my YouTube videos and also some of my posts and shares out, there was an issue with the API key. I don't want to get into the explanation of what that is, but with the people filling out the form and then getting that information to me. And I was wondering what was happening, why I was not getting anything over the course of the past week. So my apologies for that. So in fairness, I do have to go back and correct those ads and contact the places that I had those links to make sure that people do have the opportunity to reach out to me. And then also, because when people request a silver ebook, that I have, it's free silver, gold and silver ebook that you can download. I'll have a link for that below too if you want to check out that information too as well. But it's free, and it's something that anybody who does that, I always enter them into the drawing. But I wasn't getting any responses, and now I know why. So I'm going to extend it to next week. But what's important is for anybody that is paying attention because of the drawing. I need you to confirm, and you can do this even in the comment below. I understand the rules. Just put that, okay? Um, in order for me to do this with the membership, you would have to pay for your membership first, but this is the catch because it has to be in your name. Like 7K does the KYC, know your customer. So everything transaction wise is going to have to come from you. But is this the instant that you create your membership, I see that on my end, okay? And it just shows that you created your membership. And then would instantly PayPal you the money to you. Okay. So this is something that's how this has to take place because I cannot just go create a membership for you. You have to create the membership with your information. So please, and I'm not trying to be difficult with this, but I'm not you, so you have to create it for yourself, whoever the winner is. So if you can put in the bottom, in the comment section of the video, something about today's call or also as far as the rules, just say, I understand the rules. Okay. That way, when I do have your name in the drawing, if you do win it, that you're under the understanding that that's going to happen. I did this 2 times before in the past couple of years. And each time the people try to pull some shenanigans saying that they created their membership, but they didn't. So I will be able to see that you create your membership. Okay. But with that membership, you do get the $20 instant gold pay into your account from 7K. And then also you will get from me the Silver and Gold Solutions mug, the 1 ounce Indian buffalo silver coin, and then also a 1 ounce copper bullion coin as well. Okay, so that would be my gift to you in addition to helping you with your membership. I would go ahead and pay for that after you created your membership. So that's the contest rules. Okay, so we'll do that on October, what's that? October 4th. So I look forward to seeing everybody again next week. And if you have any questions, feel free to reach out to me at rick@silverandgoldsolutions.org. But overall, just looking at everything that I shared today, you have the central banks still driving the markets. You have the potential, you have the potential from these other, whether it's stocks, bonds, or real estate, that money coming into the gold and silver markets. And then also the price that's driving gold and silver up right now, it's still not the average everyday person wanting to save in gold and silver. It's still the banks and all these underlying factors. So kind of keep that in mind. So when the people that do start, the average day people like you and I, when we start wanting to do more, or like in my case, it would be more, gold and silver, that's going to start increasing the price of gold and silver as well. Okay, so kind of keep that in mind. So if you think this is where it's going to top out at, it's not. There's no guarantee, but there's everything that's driving the forces is moving it up. But then also, like I said, keep in mind if they do the reevaluation of gold, where they change the value of gold in all these banks instead of it being valued at 42.22 cents an ounce, and they revalue to say 5,000, just think what that's going to do to the markets, or if they do it more. Okay, so I just wanted to share that with everybody. Hope everybody has a great rest of your weekend. I appreciate your time. And like I said, reach out to me with any questions at rick@silverandgoldsolutions.org. And for those that tuned in just for I see the ones that are here on the call, I have your names down. And I will also include you on the drawing for next week, okay? Because I appreciate you showing up and spending your morning with me here today. So I wish everybody my very best. And we'll see everybody again next Saturday, okay? Take care. Bye.